Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. Today's video is going to be focusing on the month of July, which has been my best month ever. So as you can see, up 5.1% for a £5,585 gain. So a 5k month. That is amazing. Something I'm really happy about. But it was actually better than that. So if you look earlier on in the week, we were up over 10k, and that's because Trump announced the revised tariffs on certain countries, so the market went down, and more importantly, there was a revision in payroll data. So payroll data got reduced by a very big amount, and the market reacted quite badly, suggesting that the labor markets are not as good as they were reported in previous months. So the market really sold off. It is what it is. I bought some more of the dip, as it were. So hopefully we shall see how that plays out. If you look at the overall portfolio, so it's up over 25k. I'm up 61%. And before the revisions in payroll data, it was up over 30k at one point, actually. So what's driven the good month? It was earning seasons, and a lot of companies did well. Two that did fantastically well, actually, and those two are Meta and Microsoft. So let's look at Meta's earnings quickly. So this is a company I bought about 3 months ago. So if we look at my investment currently, so I have 15 shares, which I bought an average share price of $584, and it's currently trading at $747. Before the payroll situation, it was trading at $781. So I am up now just under 30%. So fantastic gains for such a short period. But I made a video about why I bought this company, and this company will continue to grow. And it won't be long before we see a share price of $1,000 on this one. So let's look back at the earnings that came out last week. So earnings per share, $7.14, beating an estimate of $5.87 to $5.89. So a massive beat on earnings per share. Very profitable company. So revenue coming at $47, with estimates about 44.3 to 44.8, which is a 21% year-over-year increase. Net income 18.3 billion, up 36% year-over-year. Daily active users 3.48 billion, coming in above estimates of 3.45 billion. And the revenue outlook is estimated to be up to $50 billion in the next quarter. So this is a company that's going to continue to do well. CapEx, which is an important metric. So company spending doesn't necessarily mean a bad thing. Usually, well, depending on what it is, it can be very bullish. So on this situation with AI, the more a company spending, the better they're going to do in general. So $66 to $72 billion forecasted. That's really good. And shares were up between 8 and 12% after hours. So really smashed earnings. And it's lovely as an investor to see a massive green candle after earnings. So this was good to see. And the second one, Microsoft. So again, smashed earnings, up 9% after hours. And this is the reason why. So 76.4 billion in revenue, up 18%, which beat estimates of 73.81 billion. So very big beat there. Earnings per share up 24%, coming in at $3.65, with estimates of $3.38 essentially. One of the key things was cloud revenue. That came up really high, 46.7 billion, up 27%, with Azure up 39%. So this is really solid performance. Again, CapEx being spent by Microsoft, 24.2 billion, up 27% year-over-year. So another one that did very well. Now, as mentioned earlier, I bought a new stock. I don't buy too many stocks. So this is the fourth one I'm buying this year. The other three have been Meta, Hims, and Oscar Health. And I made a post over on my investor circle group, which I've launched just to discuss stocks with people that follow me. And I wrote, here are the performances of the 3 stocks that I bought very recently. So about 3 months ago, So Meta doing really, really well, up 32%. This was before the payroll revisions, so it's a bit lower than that, but still doing well. And Hims up about 10% right now. Oscar's down, but they've got earnings coming up next week, I believe. Let's see how they do. But this is one I believe in long term, as the other ones are performing well right now. I think this one will too. So my new stock is Robinhood. Founded in 2013, it's an online brokerage very similar to Trading 212, mainly operating in the States, and it allows retail investors like you or me to trade stocks, ETFs, options, and cryptocurrencies without fees. It's founder-led by a Stanford math graduate called Vlad Tenev. Very impressive guy, actually. Really sharp. You can tell, very intelligent. And founder-led companies generally do quite well according to historic metrics. And why could? So growing revenues with almost $1 billion in the most recent quarter. So let's have a quick look at their revenues. So as you can see, they're growing. And the most recent quarter, actually, they made almost $1 billion in revenue. Again, growing quarter over quarter and year over year. If we look at free cash flow, $640 million, which is fabulous. And this is one of the reasons why the stock price is growing up. The other thing is net profit margin, 47%. This is huge. I like to look at companies for net profit margin. It shows how the business is faring after all expenses. And this is a really, really big, solid amount. They also have zero debt. Really important. So it usually shows that companies with low levels of debt, that means they can operate off their own balance sheet. It means that the business is quite healthy. There are a lot of companies that are using a lot of borrowed cash to grow their business, which is fine. It's not a problem. But this is a sign that a company is doing well with these kind of free cash flows. And this is one of the reasons why they have zero debt and they have $10 billion in cash. So a lot of cash, which they can do a lot of things with. And they are doing these kind of things. They have 9 businesses within the company itself, which each drives revenues of $100 million plus. So if those grow separately and rapidly, then we're going to see a company that is going to eat up a lot of market share. So it's a free app essentially, but they have paying customers. So they have gold customers who pay $5 a month, and they're at 3.5 million subscribers, up 75% year over year. So people are really liking the Robinhood app and its customer centric approach. In fact, 1 in 3 are gold customers. So this is not only is a driver of revenue, but it also shows that the market is liking the product itself. Crypto trading, so they do a lot of that. It's on the rise, especially with the vogue of Ethereum-based products such as stablecoins. We're going to see a lot of activity in Ethereum and also Bitcoin as well, just because of the Bitcoin's popularity. They have $255 billion in assets under management, $18 billion of that coming in the last quarter. So a lot of money flowing into the company from users, which is really, really solid and a big metric in this area. And the overall market is $145 trillion. So a huge market which they can expand into. So there's room for growth. So on that basis, I believe this company is really, really solid. I think it's going to continue to do well. And I bought 75 shares for just under £6,000. So how did I fund it? Let's have a quick look. So I deposited £1,500. And also I sold some shares in AbbVie. And I trimmed a bit of Tesla, both for profits. So let's have a quick look. I sold 3.5 shares in Tesla for a £260 gain. And overall sold for £837. Also, I sold my entire AbbVie position for about £3,200 for an overall gain of about £640. So let's have a quick look at that. So they were sold in tranches. So here's one for £114 gain. The next one, 5 shares at £140 gain. The bigger tranche of just under 10 shares for £278 gain. And the final one, which was just over 3.5 shares for £100 gain. So this is how I bought it. I eventually bought some more. So I bought the dip at the end of the week from the payroll data. So I deposited £1,000. I bought 300 more in Robinhood, taking my holding to 75 shares. And I also invested in my Pi, which bought a lot of these companies here, as you can see. So yeah, so that's my purchase of Robinhood. stay tuned in to see how that does. If you're liking the clarity on the video so far and my overall portfolio, please give it a like. Press the bell icon so you get notified when a new video comes out. It's usually once a week. And please subscribe to follow the journey to how my portfolio does. So dividends for this month, very lean, only one for 21p from Nvidia. Yeah, it is what it is. I am moving away from a dividend focus to growth stocks, which I believe are doing quite well. And as you can see, with dividends, you're not going to get 5k months. It's just not going to happen. So eventually I'm going to pivot back into dividends when the portfolio hits its goal, which is about 500k, and then I will try and live off those dividends. Now, I don't get many, but a few questions are starting to come in from my videos. And this one came in from Joe Whitcomb, and he said, I'm new to trading and was wondering if you could give me some pointers like what to look for in companies and how to know when to get into them to get the growth you have had. I've only started this week and got shares in Nvidia, AMD, and Vanguard. Nvidia, solid stock, the biggest company in the world. Guidance being given is that this is going to continue in terms of their revenues, and it's smashing, so well done on that. AMD is one that had a dip and it's on the recovery. Again, a good one. I think, I don't know what you mean by Vanguard. I guess you mean the S&P 500, which is fine. This is what I urge a lot of beginner investors to put into, because it means that you don't have to do the research and get the knowledge of delving into individual stocks, and it's the safest option. So yeah, well done. And my answer to that was, wow, that's a big question, and it is, to answer in a couple of paragraphs. But what the stock market really likes is growth, and this is true. So if you have a company that is growing in revenues, growing in earnings per share, the share price will grow. It will just follow. So if you can, look for those. And I'll summarize that in the next sentence. Also, free cash flow is an important metric. I also like to look at high net profit margin. That's a key one. When you've got companies that are generating revenue, but they're on very thin profit margins, it means that something can go wrong and all their profit is gone. But if you've got big profit margins, like I just showed you with Robinhood at 47%, it means there's a lot of flexibility. They can change things, they can move things around. If something goes drastic, then it's not going to have as big an impact. And Joe responded with, it would be a good video to watch, like a video scouting for potential stocks to buy into and explaining all the above. And I said my next video will summarize a stock, which I will be buying this week, which I did with Robinhood. But if you are looking for more videos about why I have bought certain stocks, so if you look at video 30, I described the reasons why I bought Oscar. Video 20, why I bought Meta, which has done really, really well for me. And video 22, where I bought HIMS, which is now starting to do well. The other question coming in is from LFL. What's your ultimate goal in terms of money? And my main goal is to get to 500k. And then the plan is to move away from growth stocks and focus more on stability at that stage. But let's see how that goes. Ultimately, I want to get to 1 million, but let's get to the 500k first, and let's see how long that takes. And if I even get there, I'm hoping that I will. So let's take a quick look at the companies that have done well for me and I've done badly for the month. Let's go for the bad first. So the company that performed the worst for me this month was Oscar Health. So down 16.48% for an £822 loss as of now, but they've got earnings coming up. So I'm hoping this company will do well. Long term, it will do well. I'm pretty confident of this. This is one of the reasons why I bought this. But again, we just have to wait. And a lot of these companies that are losing right now, we'll just have to wait. The second one is ASML, down 17.19%. And for the month, down 13.83%. And that's mainly due to the guidance given by management, where they're not sure what the revenues will be like for the next year. But I can't see a world where all these other semiconductor companies are doing really, really well, like Nvidia, Broadcom, etc. And this company doesn't do well in the long term. So maybe the management just being cautious and they're lowballing. But I think this is a good, solid company, good buy, and I think it will do well. Again, we just have to wait. The next one is MicroStrategy, down 8.2%. And that's because of the recent price of Bitcoin going down. Obviously, this company just holds Bitcoin essentially. And when Bitcoin goes down, so it does too. So down 8.2%. But overall, I'm still up on this position just by a smidgen. Next one up is Apple. Overall up 3.48%. But for the month, down just under 5%. So these aren't really big losers. but this one did quite badly after the payroll submission. It reported earnings too. The earnings were actually quite good, but sometimes the market does this where it goes down even when earnings are good. So let's look at the ones that have done really well for me this month. In at number 5 is my biggest holding, which is Google. I'm up 10% on that, and this one had a good month, up 5.46%. It was up higher than that again. It's a common theme. It was higher, but it settled at 5.46. Had a good earnings too, which was really important. I've covered this in a previous video, the earnings. So this one in at number 5. In at number 4 is Broadcom, one of my star performers of late. So up 6.35% for the month. If you look at the last quarter, it's up just under 41% and up just under 100% in the last year. It's actually trying to keep a pace of Nvidia, which is not easy to do, but it's managing to do that, which is no mean feat. So yeah, really, really happy with the performance of this company. In at number 3 is Microsoft, up just under 34% on this one. It had a great month and solid earnings and up 6.63% overall. Now, speaking of Nvidia earlier, here it is as the second best performer for the month, up 9.7%. Really solid performer. Went past and became the first company to go past the $4 trillion in market cap. So it's absolutely flying. According to guidance on the markets, CapEx spending is going to continue, at least in the short to medium term. And the best performer of the month is HIMS. Okay, so this was the company that I bought recently with an average price of $57, and it's currently at $62.44. It hit $70 actually. It went just over $70 in the middle of the week, and it's something I'm really, really happy about. They've got earnings coming up, so let's see how they do. The sentiment seems like it's going to do okay, as the market is buying this up quite solidly, and it's been my best performer for the month, 31.56. So really, really happy, and this is one that I'm excited about long term. So yeah, so that's it for the video. Thank you very much for joining me. Just a quick summary. Up just under 6K for the month. Amazing. It's earning me more money than my actual current job. So hopefully in the long term, I don't know if this can replace my income. Hopefully it does. And yeah, really, really happy. So thank you very much again. Please like, comment, and subscribe, and I will see you on the next video.